Well, glad to have you back. Nigeria's foreign exchange market and the stock exchange have been subjects of interest for investors and policymakers alike. While the Nigerian foreign exchange market has been volatile in recent times, with fluctuations in the exchange rate affecting the economy, the performance of the Nigerian stock market has been mixed in recent days as the NGX All-Share Index declined by 0.66% as of September 26, 2023, on indication of the current market sentiment. However, analysts say there is potential for growth in both markets as policymakers are working to address these challenges. Let's get more insights into this. Mr. Babajide Atolagbe is a portfolio manager at AfriInvest Assets Management West Africa, an investment analyst with an avid interest in investment management and advisory services. He's also trained in conducting macroeconomic and industry analysis, equities, fixed income valuation, capital market analysis, and all of that. I can go on and on. Thank you so much, Mr. Atolagbe. It's good to see you.
Hi, good afternoon. Thanks for having me.
Yes, let me start with what is happening presently at the FX market. After the opening up of this market, many expected that it will find a level, demand and supply. But it seems like the demand is outweighing what we have on ground and even the supply. And it is hitting 1,000 naira to the greenback. How would you react to this? And what impact do you think this will have on confidence in the market?
Yeah, you're right. What we have in the market is currently a situation of demand-supply imbalance, right? Our demands in the beginning of the year has been, relatively, the same with what we've had in prior years. But what has actually flipped now is the supply factor. And let me start from the state of the foreign reserve, right? As at 2022, this time last year, the Nigerian foreign reserve was sitting around $36 billion, right? And as we speak now, we are within the range of $33.5 billion and thereabout. And based on technicals, it suggests that we are on a downward trend, on a downward slope. And we can draw inference from that because despite the fact that the current administration has promised to, make attempts to increase supply in the market, and they also came out to do the unification, right, so that the government can have access to more supply of FX, and then the economy can be stabilized. But we've not seen that, promise come to fruition simply because, the supply are not coming in, and it is creating this sort of imbalance in the market. And in case in point, if you look at oil production numbers, it has been lackluster since 2022. We've been ranging between 900,000 barrels per day to about a million and 1.2 million barrels within that range, and it is not exciting. We were coming from the range of 1.6, 1.8, even as far as 2 at some point. So that material difference in our oil production numbers is really telling on the reserve, and it is really telling on the ability of the CBN to actually supply to match up demand in the market. And if we continue to experience these supply challenges from time to time, and demand, of course, is not likely to moderate, we are going to see that expansion between the official window as well and the parallel market. The official window is currently trading at 772 thereabouts, and the parallel market is ranging between 990 to 1,000. So it's not an exciting moment, and the case is still a similar trend based on what we've seen in the past. Supply not matching up with demand, and those who have the dollars will rather go and trade their dollar at the parallel market where they can get a much more intrinsic value of the currency and take the currency to the official market where it is trading at 772. So as long as we continue to see that inability of the central bank to supply adequately, the parallel market is going to expand at a faster pace. I mean, the last time we saw the CBN come out to sell, FX to banks was about 2 months ago, right? Through the SMIS window, but we've not seen reports about the CBN coming to sell out to banks, periodically as promised. So if demand continues to, move at this pace, if people want to access FX, if they can't get at the bank rate, they will definitely go to the parallel market. And because in that space, it's an over-the-counter market, you tend to see pricing move, in an unregulated way. So we think the situation is still going to continue if, we don't have any quick fix to the supply problem that we have at the moment.
Interesting way to start our conversation, but I will now ask you what your assessment is for the NGX in the first half of this year.
Yeah, I mean, for the first half of the year, I would think we had, a case of two halves, right? The first quarter as well as the second quarter. The fourth quarter being that, activities were not really great in the first quarter, although the market, wrapped up some slight gains to the tune of about 10%. But activities were not really great because of the election uncertainty, right? A lot of domestic and foreign players were, trading cautiously, not wanting to expose their investment into Nigeria at a large scale. So we saw that in the first quarter of the first half, we didn't see so much interest in the market. But upon as we had the election and then we had this sense of clarity in terms of where the country is heading politically, we saw resumption of interest in the market. And in the first few weeks, we saw more interest from the foreign portfolio investors, from the foreign investors into the equities market because the administration had hinted at adopting a much more market-friendly approach, right? So that kind of improved sentiment in the market. And then we saw a lot of investors participating in the stock market. And it's reflected on prices. I mean, the NGX crossed the 60,000 psychological benchmark, which is the highest we've seen in almost a decade right now. So that interest spurred market to that position, and investors are still looking out for more and more policies that would encourage a much more market-friendly economy, and how that would translate into, of course, economic gains for investors.
Interestingly, the issue of investors' confidence coming here, and we see President Tinubu pushing this everywhere he goes, saying Nigeria is the place to do business. Bring in your money. We are ready to help you make profit in a very good environment. So I'm going to ask you, and part of it was that significant close of market at NASDAQ, interesting stuff. Top business leaders in attendance, and President Tinubu sold the Nigerian brand again, even at that event. How does this come to you? What does it tell you about Nigeria, specifically at this time, with the fallout of the UNGA 2023?
Well, it is quite symbolic, but at the same time, I wouldn't say it is so special. Right. It is symbolic in the sense that the body language of the federal government, led by Tinubu, is suggesting to international investors and to the market at large that we want to adopt a free market environment where foreign investors can come in and earn a decent yield in Nigeria without maybe as we are showing the positive body language to the international economy, to the international participants, we should also, tweak some metrics at home to align what we want to achieve with what we currently have. And I'm saying this because as an investor, investors will definitely look beyond what the president is saying at whatever event. They look at metrics, they look at numbers, they look at indicators. And if the president is out there inviting investors to come and participate in Nigeria, in the capital market or in whatever business form, and the numbers are saying otherwise, I'm afraid we might not get the level of traction that we want to see, right? And this still brings us back to the FX situation, right? Because if we have the government asking people to come and invest in Nigeria, investors always want their capital to be preserved, I mean, one of the key priorities of investing, is easy entry and easy exit. I mean, it's very easy to come into Nigeria because our arms are wide open, right? But what about when it is time to exit the market, right? We have a load of investors that are still trying to get out a significant portion of their money from the market. And this is as far back as 2020, right? The CBN has not completely cleared all the backlogs. And we are still, going out there to, call more folks to come in. So we need to really, have this retrospective thinking and try and make sure that our house is in order, and do that in accordance with the promotional activities that the president is doing. Fine, let's give kudos to the president for trying to invite people to see interest in Nigeria. It is the right thing to do, and it should be commended on all ground. But don't forget, investors will only look at metrics. Aside from the podium talks and the communication you send out there, they will look at metrics, look at projections, and then they can begin to take special interest in the country.
Interesting stuff. Now, like you alluded to, we even saw some foreign firms leaving the country in recent times, and that's not sending a good signal. Operational difficulties and all of that is what they have identified. So in your thoughts, what should we be discussing around the table now? What should we be hearing from the CBN governor when he's confirmed? He should be confirmed today. And also the deputy governors that will work with him. The ministers are also leading that team saying, we want investment. What really should be the conversation now that will bring in the right kind of investors? Let's wrap up on that note, Mr.
Well, I think that that's a very good question, I must say, right? I think that once we have the new CBN governor on board, firstly, I believe we need a leader who understands the economic position of Nigeria, right? And not a leader who just thinks that a particular economic theory, can work in Nigeria. Nigeria is a unique country on all fronts. So a unique approach has to be adopted. We're looking at inflation at 24%. We're looking at the dollar to the naira at 1,000 naira, and then economic growth is also not moving at an exciting pace. It's a difficult job for any CBN governor, right? But what we need to ensure now is that those key drivers of these metrics should be addressed adequately. And let me speak about that of inflation. Inflation is in Nigeria, we all know, is cost push and not necessarily a demand case. So increasing interest rates at a high magnitude to curtail rising prices may not be effective, because demand is not even the major problem that is driving our inflation northward. It is largely a supply factor, right? So that should be taken into consideration going forward. Most of all the policies and implementation should be centered around ensuring that the economy is stable. We have good infrastructure to make sure that prices are not moving high, right? So that is one on that end. And then on the FX situation, I always say that the fastest means to getting FX into a country is not necessarily through the capital market, but through trade, right? And for Nigeria, our gold is the oil, right? If we want to get in these FX into our country as fast as possible, we need to make sure that we're ramping up our production back to previous levels, back to pre-COVID-19 levels, like take us back from 1.1 million barrels per day to as high as 1.6, 1.7 million barrels per day. And we've done the numbers that if we can get to that level between a 270-day period, the country is able to gain nothing less than $2 billion in FX earnings from that export. So we need to make sure that corruption is a case of the past, or should be reduced to the barest minimum, and then we are now able to enjoy what's happening in the oil market. As you can see, oil exporting countries are jubilating at the moment because oil prices are on steroids. It's gone over 20% in the last 3 months. But the reverse is the case in Nigeria. Oil prices are trending higher, our reserves are declining at a fast pace, and the currency is also depreciating very fast. So we all need to make sure that we are well positioned to enjoy what the party that oil exporters are having, because if we don't increase our production materially, we might eventually just lose out from the party, and then we will just be left behind. And I must also say that lastly, that if you look at the geographical, if you look at the sub-Saharan Africa as we speak now, there are a lot of countries that are having serious economic challenges, right? They're also having high rate of political instability, and this simply means that most investors who are Africa-centric would be avoiding those regions, right? They'll be avoiding the likes of Ghana, they're avoiding the likes of Niger, Cameroon, Gabon, these countries that are struggling with political instability. Investors will be avoiding those countries, and then they'll be looking for a much more safer country within the African coast to invest in, right? And this is the right time to, to sell Nigeria as that, best investment destination that investors can, enjoy their good return and also enjoy their capital stability. So there are a lot of opportunities here and there that the new government needs to identify, and then they need to align their policy implementation with, market realities.
Interesting conversation there. I've been speaking to Mr. Babajide Atolagbe, is a portfolio manager at Invest West Africa. Thank you so much, and do enjoy the rest of your day.
Thank you.